Welcome back to Switzer. It's now time for our King of Charts segment where Lance Lay of Accountancy Invest does the technical analysis and tells us whether a significant pullback is ever going to happen. Welcome, Lance.
Hi, Peter.
How are you?
Very good, thanks.
Okay, now we always start off with going back in time.
So
we're going back to your January segment. Is that right?
Yep.
So take it away, guys.
I've got two little levels. You've got the big L, and there's that other one is a little L.
Okay.
That little L, those are two levels that I think it can flick up to and then come off. And then I would expect it to go back to where the S is. And the S is about 1.
Is S support?
Support.
Okay.
Switzer support, mate.
Okay, yeah.
1472.
Okay, so that's the past, Lance. What's so significant about that?
Well, you can see on the chart on that at that time was 1507.
Yep.
I identified two levels.
We're talking about the S&P 500.
Oh, sorry, yes, of course, the US S&P 500.
Yep.
I identified two levels. One was an L, the other one was a little L and a big L.
Yep. Yep.
And it's as if February never happened, and we blipped up there, and now we're sitting at the large L.
Okay. So why did you say it's as if February didn't happen?
Well, February threatened to have a pullback.
Yeah.
And it didn't.
Yeah.
And
had a few cracks with it, but it couldn't last.
It couldn't last.
Yeah.
And, you know, I think we're coming to a time where it's going to have another crack at it, as you put it, with a pullback soon. So,
well, let's go to the first chart. Sure. I presume you're starting on the S&P 500.
That's right.
Yep.
So there you can see 30th of January in the middle of the chart, and you can see that was when the clip was played. We had the little L and the big L. It's flicked up to the large L now.
And it's having trouble with the large L, isn't it?
It's having trouble with the large L. I actually think it'll go up to the and have a sneak peek at the R level there.
Now, why have you called it R, Lance?
Because I think it's resistance.
Okay.
So that resistance level actually matches the 8th of October 2007 level.
Okay. Well, Stan Stovall of S&P in the US has done research which shows when the S&P goes through its all-time high, it might go 3% higher and then have a big pullback. That's what history shows.
You know, look, it could well do that. And actually, the next chart, I mean, before we get onto that, though, it might do that. I hope it doesn't have a big pullback.
Me too.
You know, I'd like a steady market so no one gets too spooked.
Yeah.
But what's important there is that I've got two other levels, which, in fact, three levels. You can see on the chart S, another S, and a big yellow S. So the first S and the second S were levels that I'd identified previously, either in the Switzer report or in this show. That's 2.5% lower, the first one. The next S is 4% lower. And the third S is 6.2% lower.
There's a yellow line there.
The big yellow line there. What that really means is that the market can come back to these levels and take off again without much problem.
Yeah, and a lot of people would love a 5% pullback to buy stocks at lower levels.
I think it just needs to calm itself down a little bit. And if you can see here, it's up 16.4% from that November level up until the top. In 4.5 months, it's done 16.4%.
Okay, let's go to the next chart. The next one's a quickie, I believe. Is that right?
Yeah. So this next one, this is something I've broken my rule a little bit on coming into this show. I can actually see that as the good news begins to consolidate itself and flow, I can see the S&P going up 11.6%. That's the 1744 that I've shown there.
So you're not nominating a time period, but I guess you presume sometime over this year.
Correct.
11.6% is a possibility.
I think that's what I'm looking at, and the numbers show that as a possibility.
Okay, right.
Next one. So this is the Shanghai Composite.
And this is a bit of a negative, Lance, isn't it? It's not showing the bullishness you'd like to see.
Well, actually, Peter, for all of last year, it'd been looking for a base. And when I came on the show in November, where they've got N on that chart, N was sitting in November, on the November 29th show, it sat right on the B level, the bad level. And thank goodness it bounced off. And so what we've had is we've had a massive bounce, you can see in that chart, of 25% in 2.5 months. That was up until... Huge.
But by the way, you use B for bad. F, it doesn't stand for what I think it stands for, is it? Okay, go on.
F stands for February, Peter.
Oh, okay, good.
And so in the February show when I came on, at that point, the yellow line that we can see there, I said it would go down to that level, and it has done.
Has done that and flicked off it.
And flicked off it. I think it's going to go down. I hope it goes down a little bit.
Will it test it again?
I think it will, and I think it'll go a little bit lower again.
Yeah, okay, next chart.
So the ASX, I normally don't talk about this one, but it's really quite compelling in terms of what it's done, and I think what it's showing us. On the 16th of November, it's been rocketing up, and it's rocketed up all the way here, and where the R level is where I have resistance.
What's that level?
5124.
Okay.
And in the February show, that's the F that's marked there. I identified an R, which is a resistance level that I thought it could go to and flick off.
So it did that on an intraday basis, didn't it, Lance?
It did that actually on a closed basis above. It immediately came off the next day.
Didn't like it.
Didn't like it. And now we're sitting at 4987 when I did this chart.
Is that chart saying this has got a capacity to spin around and get back on that growth line again?
Well, I think that as with most of the charts that I'm seeing, you've got levels that you can identify that it can come back to. So, for example, that S there, that represents 4828, and it represents a fall of another 3.3% without much problem. And what that will represent is a fall of 6.9% from the top, or a rise of 11.3% from the bottom. So it's a reasonable level to fall back to.
So those people are talking about a pullback. A bit of a pullback is going on if you go from that high point to where we are now.
Correct. Yeah. And I'd like to see that to continue. And this is where I say in the chart, consolidation is continuing.
Okay, next one, mate. We're running out of time, as always.
Okay, so the Nikkei. This shows us really what the real bull market has been looking like. And, you know, from the bottom there on the 13th of November up until in 4 months, it's done 45% at 12,508. I mean, this index can come back 7%, 9.7%, 12.6%, and even 22% it can come off, and we're still okay, and it's still all right. So this, I show this deliberately to say, you know, this market, whether it's in Japan, Shanghai, Australia, US, it can come back a nice fair way and still go up.
And would be a buying opportunity.
And I think it'd be nice because it'd calm some of the crazy bull buying that is going on in some sectors.
As always, highly interesting. Who could have thought that we could make technical stuff so interesting? Thanks, Lance.
Peter.
If you want to read my thoughts each morning at the close of Wall Street, check out my website, switzer.com.au. And if you've got interest in self-managed super funds, have a look at the switzersuperreport.com.au website. Got any questions for me or our guests, email them to switzer@skynews.com.au. I'm Peter Switzer. Thanks for watching. I'll see you tomorrow night.